Hello, Michael Hopkins is Seeking Alpha with Jennifer Warren at Concept Elemental. You were at the Seeking Alpha Investing Summit in June, big gathering there in New York City. Just maybe some quick thoughts on that, and then we'll transition into what's been happening in energy because a lot has happened since that event.
Right. No, your event was really fantastic. It brought together amazing, leaders in all sorts of areas, all the Invescos and Fidelities and all that, asset managers, economists, and the crypto panels were spectacular. You had the best of there. Just really good analysis, good contributors, good seeking alpha, people that work there that have their own shtick. There was some really good tools for investors, I would say. And I was really happy to participate since I've been, contributing about energy developments for like over a decade now at Seeking Alpha. So one of your early people. So that was cool. But yeah, so on the energy front, so what I can say, even since that summit, which was really a broad sweep of energy, oil and gas, but also energy infrastructure, and also new types of infrastructure, whether it's advanced manufacturing or things connected to decarbonization. I talked about all that, and that's all still very much happening. And of late, I've been going deeper in the weeds because I'm working on a publication that comes out in the end of October. And then I've got some conferences coming up, a Fed conference, maybe an Energy Institute conference connected to an academic institution. And so it just starts crystallizing my thoughts on, what is happening, right? And what's changing and what's staying the same. And but so I'm still looking at a lot of the same things, but I think one interesting thing that just has come to light even through the R&D I'm doing right now is just that energy in general, it needs to be affordable, reliable, cleaner. It needs to be scaled or scalable. And that has to do with all these investments that we're looking at. And you even see that a lot, even in the, AI discussions, what is scalable? That's really, that's really where it's at, right? So I can switch into the slides now.
Yeah,
Let's go there. Um, so this is just kind of looking at, global supply and demand fundamentals, because I just want to note where things are at because it's instructive about pricing. And I know that there's some seeming, tailwinds now on the macro environment, but we still have a lot of the volatility to do with elections, geopolitical volatility, just all that's always there. I
yeah.
mean, our elections, other countries' elections are done. Some of them are done, but now it's us. But just on the oil and gas front. So as you can see in this chart right here, this is 2024, right about here. And this light gray is demand less supply, and it's relative scarcity. So that means there's actually a little more demand than supply. Supply is tight. It's going to be tight in oil, probably, up to the end of this year. And then it starts, as you can see here, it starts to let up as production increases. And, we are going to have record oil demand for 2025. There's tightness expected up into that point. Now, there's a lot of squishiness, right? Whether it's plus or minus 3 months, 6 months, so you can't nail it completely, depending on all sorts of factors, right, to do with the macro economy and everything, and any crises and all that. But just that record production in the United States. We're going to be producing just a bit under extra million barrels a day next year, and globally it's 2.2 million. So that's all growth. And this just shows the tightness here and the pricing. So if it's tight, it means prices are going to be firm, right? The other thing is natural gas. So natural gas prices here, if you look at this, that we're about here, they're forecast to rise, and they're going to be firming up. And there's, projected a 40%, 46% rise between August and December futures contracts. So, and that has to do with a number of things, partly because of demand, but also partly because of natural gas producers, throttling back some so that they can be profitable because they can't produce at really, really low prices. And, I've talked about that before, and that's continuing. I just want to show this. Now, this stacked chart here over on the left is just showing this spike is, all the post-pandemic spike, right? The run up in energy, pandemic here at this trough. Now things, as you can see here, 2023 onward, it's kind of like leveling out as to where we're really at, in terms of, these are all Texas exports here. So there's kind of this leveling out effect. And then over here on the right is Texas exports of 2023, $221 billion. Huge. Crude oil, obviously the lion's share of exports by dollar amount, and it's split pretty much between Asia and Europe, and that was last year. Natural gas, pipeline and LNG, it's a big Europe story with some Asia. And as we know, that can shift around a little bit too. And I think it's instructive as to the whole market, the whole export market in some respects from the United States point of view. Refined product, Latin America, North America. This one's kind of interesting here at the bottom right, this hydrocarbon gas liquids. So the big story there, those natural gas liquids is Asia, and that's like the ethanes and the propanes, and that goes into, plastics and things like that. And so it's all on an uptrend, and that also speaks to global demand. And I just want to always show a little Texas because we're the big producer here. So we producing about 5.6 million barrels a day of that 13 plus million barrels a day. So that's, nearly 50% of the market. And then natural gas production here, you can see what's interesting about the natural gas production is that it's reducing a little bit. Some of the marketed gas is falling some. Again, that's that restraint that I was talking about, so that, prices can firm up. So it's like 34.6 BCF produced, and then marketed 32.3, and that's supposed to fall. It fell in June a little bit, just again, just kind of that that being more rational. Now here's your maps. Here's your maps with charts, Michael.
Yeah, I do like my map.
You got to have
like
we have to have the obligatory map. And so really what this is showing, if you look, this is the world here. This is, all energy use. And this is actually from the Energy Institute's statistical review of, the most recent numbers. And this used to be done by BP. They've switched it now, and it's this Energy Institute. And I actually listened to the live webcast of it, and this think tank in DC did it, and then I've got the report. But what's really interesting about this is if you look at it, because we're always talking about, the energy transition, and I always say yes, but the lion's share, over 80%, is fossil fuels. Well, here we are. Here's the numbers, and this is interesting because what they were saying here is that of developing countries, non-advanced, it's the fossil fuel mix is 84%. Total global, it's more like 81%. So it still shows you that the needle is moving really slow on moving to renewables, because we're starting, we have such a large hydrocarbon base, right? And this is just showing the world here. The dominant source is oil, followed by coal, followed by natural gas, total world. And if you look at North America, the red is oil, purple natural gas, and then renewables. So that's kind of that. Central and South America, interesting. Oil, the red, big, but they have a lot of hydro and the natural gas. And there is a little stat I'll give you in a minute about Central and South America. This is just looking at other regions, breaking down Europe. Interestingly, so again, red is oil. Look at in Europe, and natural gas is purple, and then renewables is the green. Still some coal, a lot more oil than you would think, right? But it just is what it is. Asia, now the black is coal, big coal story. And then oil, natural gas here, the purple. Middle East, hardly any renewables to speak of. It's all oil and natural gas. Southeast Asia, coal, oil, natural gas. So it really gives you a sense of what the fuel mixes are in these areas, regardless of what we say over here and in Europe about the energy transition. This is where the rubber meets the road on energy, so I think that's what's kind of interesting about it. So what I was going to tell you about renewable growth, and that's back to the Central South America here, just this little circle, is that the renewable growth was almost 30% of total. So they actually had the lion's share of renewables growth. So that's kind of interesting. The other story that's interesting, if you go back here, the China story on grid scale batteries. China has 50% of the market at a market of 55.7 gigawatts of grid scale battery. So, whereas before we didn't have battery as a source, on the books as much. Of course, China has it because, they have the advantage of all the processing and all that with the critical minerals and everything. So they've got that, and we're adding battery storage and things in Texas specifically. I think we're actually the leader in that. And some of the R&D I've been doing, I've been really getting deep into the weeds on the grid and developments with the grid. The other thing I just want to mention about this outlook of the Energy Institute was that one of the commentators just said, there's this expectation that nuclear is going to increase or will increase, 3 times by 2050. And he was just saying he really doubts that goal is going to be reached for all kinds of reasons, which I think is kind of interesting. It is a little more complex with nuclear, as much as we, absolutely are talking about it a lot. There's just a lot of complexity by country even to do with it. Though it's, though there's the intention. So also renewables growth. One thing that was noted in this discussion of the Energy Institute is that in the United States and Europe right now, there's a lot of volatility and politicization regarding renewables growth. And of course, we see that here. We're going to really see some interesting things depending on who gets in office, as to do with the IRA legislation and different things. Bottom line, all the bills that have been passed, and I've talked about these, right? The infrastructure bill, the CHIPS bill, and the decarbonization bill, let's just call it that. A lot of money, but it's also sparked a lot of this new activity, right? So it's actually it's a net positive, I think, in some respects, considering that we were coming off this pandemic, right? And so that's a lot of headwinds that, hopefully we can continue with in the future. Oh, one other note about the observations on energy globally is that carbon emissions have risen in spite of all the decarbonization we're doing, Europe's doing, everybody's trying to do. They've gone up 2.1%, exceeded the 2022 record. We're at like 40 gigatons. Flared CO2 up 7%, methane up 5%. So for all of what we're trying to do, and a lot of it has to do with developing world, usage, but try as we may, we have to keep going, right? with all that. And then lastly, this was just some data I looked at too of late. I was just looking at some Nasdaq index performances, various things connected to energy and tech, right? And obviously, global AI, big data was, top top performer, and then U.S. large cap, very steady and strong growth. Semiconductors, strong. Cybersecurity, reasonable. Miners, copper, uranium, the juniors, reasonable and interesting growth, but lots of volatility and definitely more of a long play if that's kind of your, what you're interested in. And this is just to say, I visited a really cool Bitcoin mine, and this is just, he's just pulling out, one of the computers, and this is actually immersion cooling here, by the way, as opposed to air cooling. I will stop sharing. But
Yeah, I mean, really great slides again. I think that I think there was a topic I did want to avoid, and that was politics. But also going through some of those earlier slides when you were looking at oil and gas, and that these prices are firming up. I think a lot of like when we talk about what happens, and we're looking into 2025, correct?
right,
So we're
right,
all
right.
November. So, I mean, very briefly, no matter what happens in November, and I don't know if we really want to get into the nitty-gritty of what happens in November, what happens after November, but it sounds like to me, regardless of what may happen with politics and the election and all that, it's pretty much slow and steady progress for energy, especially in the oil and gas sectors.
Yeah, no, that's a good observation and sort of question. I mean, honestly, whoever gets in office, I mean, let's just say, if it's Democrat, well, it's a continuation of what's been happening. They really can't throttle back oil and gas development, though they might try. Not going to
Hmm.
happen. We play in a global market, and if they understand, it's not just policy. This is the market, and I've discussed that before. The market drives everything, right? At the end of the day, politicians come and go, but the market's the market, and the market stays. And there's supply and demand, and energy's in demand. It's in demand all over the world, and it is particularly demanding United States hydrocarbons. That's just the facts, like it or not. And because we're trying to decarbonize, that's a good thing. We're one of the games in town trying to do it. So why would you want to, put roadblocks into that? Especially if you understand the grids. If you understand what's going on with the grids and transmission and all that, you know, it's just, it's really complicated, and the IRA legislation is all about policy directed towards adding renewables, adding all this, decarbonized energy, if you will. um there are constraints, and I won't go into deep detail about that. And there's just constraints to do with economics, constraints to do with physics, supply chains, geopolitics, markets, incumbents, you name it, it's all there. And then on the flip side, if it's Republican, that idea floated about, oh, it's going to be drill, baby, drill. Well, it's not. There might be some tailwinds or sentiment change, but frankly, this is all about profitability. It's all about supply and demand. So you can say turn on the spigot, but it's not going to happen because of price. And we saw that with natural gas, right? The natural gas producers are like, we're not going to pump all out because we have to be profitable. Pump all out at your peril. you know
Yeah.
so that's the reality. Again, I don't care which side of the aisle you're on, you better know the markets, you better understand economics, and you better understand how businesses run, and try to match up your policy with that. So that's really kind of that disparity, right? And so that's what I'd say about that.
Yeah, but it sounds like, I mean, it's for me anyway, it seems like we've gone through 4, maybe 8 years of the slow and steady, like gradual. There's, of course, there's bumps in the road. It's a roller coaster sometimes, but again, I think when
Yeah.
you look at these long term, it's still the long term story for energy that's playing out.
Right. And with LNG even, sure, okay, make sure we're doing this environmentally sound, and make sure, yeah, we don't want booms and busts. Absolutely. The oil and gas industry doesn't want that. And they're trying to do things that have changed that dynamic, right? To do with dividends and all that. They learned with shale, right? And so trying to smooth that out as much as possible. It's the same with LNG capacity, LNG production, all that. It's the same with minerals. It's the same story everywhere. It's the same with AI, right? You really don't want volatility. You really don't want booms and busts. And right now, we're a little bit set up for, it's boom, but it could go bust, right? We don't know how hard the pedal is at present and how hard it should be pushed, but it seems like it's being pushed pretty hard, if you ask me. But so that's kind of my color on that. Um,
So, but then let's go into investment implications. Your investment thoughts you're having right now?
yeah, I mean, just a lot of the things I said at the summit are completely germane, completely true, bearing out, bearing fruit, and I would just say, again, as to oil and gas producers, I like majors, but what I'm looking at in the future as we get through some of this M&A activity is, who are the new independents that are, going to be strong and offer hopefully total return dividends, that sort of thing. I know I've mentioned FANG in the past, and I just saw a story not too long ago. One of the news flashes, oh, so and so says pick FANG. Well, we've been talking about FANG for a year and a half, right? It's Diamondback. So there may be others that emerge, in due time here soon, and that are emerging as well. I'll probably name some of them in the article. I'm still looking at, semiconductor advanced manufacturing, minerals. I'm watching minerals. I've kind of pulled back a little bit, just because of the volatility right now. Tech infrastructure, digital infrastructure, anything. I look at how it intersects with energy, right? And that's kind of really, really my focus. And because I think that's a really instructive point of view. As to drivers, I would say, global growth continues to be a driver. I talked about that at the summit, that the developing world is where, in Asia specifically, is where natural gas demand growth happens. And then there's growth here in the United States to do with data centers and AI. And I talked about that as well in the summit. So that's all still on the books. And in the work I'm doing, I'm actually, looking at all of it. I'm looking at all of it really objectively, because now we're a little further along and, we're going to keep moving along that curve. But I don't see why any of that should be rolled back, any of that advanced manufacturing semiconductors. I mean, it's on the books and, and it's going to have to happen. It has to happen because of, post-pandemic supply chain reasons and geopolitics, right? Um, yeah, and the other little thing connected to that, and it's the same idea, it's just the reshoring, right? The reshoring thematic, and that has to do with infrastructure build outs, right? And energy underlies that. Our energy infrastructure, a la our midstream sector, supports a lot of this new advanced manufacturing, both our producers and our infrastructure, developers like, Energy Transfer, Williams, all those firms. So that's kind of my investment thoughts.
Yes, it's very, very interesting you bring up energy transfer. I just think it was recently a Barron's article on energy transfer. But anyway, I don't want to get off topic here too, because I'm dropping names here and all that. But very interesting names as well, with that. And you visited the crypto mine.
Yeah, yeah.
Innovation on Bitcoin. What are your thoughts?
On mining on Bitcoin, which piece of it? There's a lot to all that.
Yeah.
Um, yeah, I mean, by virtue of being in Texas, where we have 1/6 of the Bitcoin mining, capacity here, maybe growing, I don't know. Um, it's a really, really dynamic area, where the mining happens, how the mining is shifting. Um, Obviously, it's connected to energy as well, and it's really interesting to see the differentiated strategies of Bitcoin miners. Right, I went to a blockchain summit last November, and that's where I really started, kind of looking at the meaning of it all. And and then the whole white paper, Bitcoin and other cryptos, it's a huge world unto itself. And I can't even articulate it. I mean, I understand it a lot. And I like the concept. I mean, peer-to-peer, payments, globally, nobody in the middle, all that, I get all that. And I understand the virtues of it. And I think it's just really going to be interesting to see what all emerges in the future related to blockchain and Bitcoin, because it's not going away, you know. So I have a miner, I invest in a miner, and I think there's just a lot of, interesting competition going on there as well. So
So I think the one key piece that maybe investors are missing in terms of Bitcoin and also just technology infrastructure in general is that this takes a lot of energy. I think we've talked about this in
yeah,
previous.
yes. Yeah, exactly. I've been talking about it for like a year and a half. No, I really, really started talking about it in earnest in May, after I'd been at that Fed Tech Disruption Conference. And there's a bunch of material on all that. And none of that has changed. That thesis has never changed. If anything, it's gotten, it's there, right? We've seen it. We've seen stories in the media. The media started, really writing about it, kind of late last year and a lot this spring. They really started writing about it a lot this spring because of the Virginia data center, stuff, right? Because Virginia is the, largest data center area in the United States. And so, so those stories were coming out. I mean, there's no, I mean, yeah, it relates to different aspects of investment and infrastructure and that sort of thing. But I think it's just, there's a lot to work back with it. And I actually talked about it in the summit. I mean, I completely covered a lot of that, right? And talked about it. And but
That was part of the conversation where you went, it was also the helicopter ride above the semiconductor fab, right?
yeah, that was that. Well, and that was, yeah, and that was seeing that semiconductor fab, and now, it was initially like $17 billion investment, growing to 30 because of just the cost, the unexpected cost, which always happens with large scale infrastructure projects. Now there's going to be a second fab. So but it I'm looking at all this, and I have, there's a lot of people I know connected to the fabs in different ways, whether it's water infrastructure or energy infrastructure or things like that. So I definitely keep my ears to the ground and, kind of try to, see what's really happening as opposed to just, scenarios and forecasts, right? So
So let's wrap it up then, or I guess like start heading in that direction anyway. You're working on an outlook for some published work, doing a lot of some research, a lot of stuff you're looking at. Anything you can share? Anything you got some in terms of observations? Any takeaways for investors?
well, I mean, I think actually everything I said is kind of in it. I've actually, I think what I've been talking about really distills a, a lot of that. It's, what's going to be different is, I'm just drilling into a lot of different thematics related to it, and I think, again, to see what is, what's really happening. And, as much as you hear in the media about, the agendas, the decarbonization, this, that, the other, again, if you're an investor, you need to kind of really know what's happening. Because if you just follow what's perceived trend, you can get burned, right? And so I'm just trying to not get burned, you know, um, and be a little bit objective, right? I think this is, I would say, if anything, this outlook is all about being objective, and empirical as opposed to anecdotal, and looking at the data, marrying the data with the empirics, um,
And maybe that's the way that investors should approach this, not only on, the oil and gas side, but on renewable sides. Just take a bigger picture, high level, like you said, objective viewpoint or observations of what might be going on in the market.
Yeah, exactly. And I mean, it's just like the market moves with news, right? You hear one announcement, it moves, right? And that's just one piece of news at a point in time, right? It's anecdotal, so I think I'm looking at a point in time for sure in what I'm doing, but I'm also trying to look at where we've been, and, how things mesh with what the expectation is, that sort of thing. So,
So what do you do next? Do you have anything coming up? Anything that you're looking at doing? Anything you can share in terms of, I don't know, articles, presentations, seminars, anything that you might be willing to disclose?
yeah, I mean, one thing, I do have something I'll be doing in energy in October, but I haven't been given, my marching orders as to what they're looking for yet. And then I will be attending sort of an AI tech disruption conference in early October, and just to see how it's all really filtering through and the implications, what's the research look like, so it's that's going to be really interesting. So yeah, so
And I'm
we'll talk about that when it's done for sure.
sure everyone will be curious about what you got to say and what you present and all
Yeah.
that.
And I'm trying to be really a blank slate too, right? Because, it's really easy to go in with all your baggage, right? And so I'm just going to be like a dummy, an AI dummy absorbing it all, and just sort of like, oh, to be open, right? To just kind of wipe the slate and listen. Because that's really, I mean, when I first heard about LLMs and semiconductors, like not this May, but the May before, I was really a blank slate, and I was like, oh wow, and so you can kind of not have sort of like all sorts of preconceived ideas, so I think that's important, to sort of wipe your memory a little at times, you know
Awesome.
that's very
Great.
Star Trek-ish.
Yeah.
Or wherever.
Anyway, I appreciate the time,
Yeah,
Jennifer.
yeah,
Thanks again for the conversation and looking forward to what's next.
yeah, me too, thanks.